When a giant like ArcelorMittal, we're talking one of the biggest steel players on the planet, drops its results, it's not just about them. It tells a story about the whole global economy. So in this explainer, we're going to decode their latest numbers and figure out what's really going on.
So the company's CEO, Aditya Mittal, comes out and calls 2025 a pivotal year. He talks about laying these foundations for a better environment going forward. And you have to ask, right? What are these foundations? Well, it turns out the real bombshell here, it isn't hidden away in some balance sheet. Nope. It's all about a massive shift happening in their biggest market, Europe. And I'm not kidding. The company is talking about a complete reset for the entire European steel industry. This is a huge deal. So, okay, what was the problem that was so bad it needed such a radical solution? Well, for years, European steelmakers have been saying they're in an unfair fight. They're up against all these cheaper, less regulated imports, and it looks like finally policymakers have started to listen.
Okay, so the first piece of the puzzle is something called CBAM. Yeah, I know, it sounds super complicated, but the idea behind it is actually pretty simple. It just means that if you want to sell steel in Europe, you now have to pay for its carbon cost, just like the European guys do. The whole point is to level that playing field.
But that's just part one. The second part is, well, even more direct. It's called a tariff rate quota, or TRQ for short. Basically, this is a powerful new tool that just puts a hard limit on imports. And the potential impact? Whoa, we're talking about slashing steel imports into Europe by a potential 10 million tons. That is an absolutely massive amount of steel. And see, this brings us right back to what the CEO said. When he says this fundamentally resets the outlook, he is not exaggerating one bit. I mean, think about it. A carbon tax on imports and a huge cut to the volume coming in, that is a whole new ballgame. So with this new shield in place, let's take a look at how the company's building its own momentum. But here's the thing. ArcelorMittal isn't just sitting around waiting for these policy changes to save the day. Oh no. They are actively pouring money into projects to drive their own growth. And guess what? Those investments are already starting to pay off big time. Just in 2025, their big strategic projects added $700 million to their earnings. And let's be clear, this isn't some pie-in-the-sky forecast. This is real cash that's already in the bank. It proves their strategy is working, like right now. But that $700 million, yeah, that was really just the warm-up act. Because get this, the company is targeting an additional $1.6 billion in earnings from projects that are about to come online. That's more than double what they just delivered. It just shows you how clear and aggressive their plan for future growth really is. And this growth isn't just coming from one place. It's a truly global push. You've got Liberia, where they're hitting record iron ore shipments. Then over in the booming Indian market, they're building out a massive renewables business. In the US, they just took full control of their super advanced Calvert facility. And in Brazil, they're expanding production. I mean, each one of these could be a major growth story all on its own. All right, so we've got this new shield protecting them in Europe, and we've got this internal growth engine just firing on all cylinders. So the big question is, how does this all add up on the bottom line? Let's dive into the actual numbers. Okay, first up, the big one everyone watches, earnings per share. For Q4, they delivered 86 cents per share. The market was only expecting 75 cents, so that's a pretty solid beat. Right off the bat, that's a clear signal of strong performance. But here's a really crucial point the company is making. They're basically saying their whole profitability model has changed. In 2025, they made $121 in earnings for every single ton of steel they shipped. Now, why does that matter? Because they say that's more than double the profit margin they were making at the bottom of previous cycles. That suggests a much tougher, more resilient business. So the big takeaway here is really resilience. Even though they admit 2025 had some significant headwinds, the business still cranked out a massive $1.9 billion in cash that they can invest. And that cash, that's the fuel for everything, for growth and for rewarding their shareholders. And that brings us right to the payoff, right? Because a strong company that's generating a ton of cash can do some great things for its investors. So let's see exactly how ArcelorMittal is sharing the wealth. First up, the dividend. The board's proposing a bump in the annual payout, up to 60 cents per share. That's a real signal of confidence in what's coming down the pipe. And it's a direct cash return to shareholders that's growing. And then you see this number. It is honestly staggering.
Over the last 5 years, they've been aggressively buying back their own stock. And in doing so, they've cut the total number of shares out there by 38%. 38%. That's a huge reduction, and it means every single share that's left now owns a much bigger slice of the pie. It's just a super powerful way to create value for investors.
Okay, so the picture they're painting looks pretty strong, but what about the road ahead? No analysis is complete until you look at both sides of the coin, the opportunities and, of course, the potential risks.
So, on the plus side, the tailwinds. You've got those powerful new European trade rules we talked about. There's also a forecast for solid 2% global steel demand growth if you exclude China. And of course, huge opportunities coming from all the energy transition projects. But on the other side, the headwinds. They're definitely facing rising costs for raw materials and CO2. They also mentioned that the price benefits in Europe might take a little while to fully kick in. And there's still some legal uncertainty hanging over their Ilva plant in Italy.
Which kind of leaves us with this one big question. You've got these powerful new trade protections. You've got a multi-billion-dollar growth engine that's already delivering results. And you've got this really clear commitment to paying back shareholders. So the question is, are we watching a classic industrial giant successfully reinvent itself for a totally new era of global competition? Look, based on all this evidence, they're certainly making a very powerful case.